In Millennials and Money today, joining me now is Susan Schmidt. She's a senior portfolio manager at Westwood Dallas. Happy to have you here in Chicago. Thanks for stopping by.
Thank you so much for having me. This is great.
So let's take a look at millennials and their money. A big problem here is that they might not realize that putting money in the bank is not the best answer, although they're great savers.
They
right?
are great savers. So this is, I think, the big fallacy. People think millennials, oh, they don't think about it, they don't think about money. They do. Actually, they are very good, and 80% of them are so saved. They're already thinking about saving for retirement. So
Excellent.
That's critical. We love that. The problem is millennials suffer from growing up in a new environment. It's an environment we've never seen before. We've all been shaped by the economic environment that we've grown up in. But millennials are a little bit different because this is the first time that we've seen an extended time of 0% interest and a very rocky market. People aren't turning to stocks, they've been turning to bonds. So millennials who have the best thing going for them, a lot of time on their investment horizon, aren't seeing that as an opportunity for them because they're shy of stocks. They just haven't experienced an environment where that's been the go-to for investors.
Should they be investing in the stock market and very, very low in bonds, or no bonds at all right now?
Most definitely they should be focused on the stock market. So millennials, again, the advantage of time. When you have that much time, you can ride out the ups and downs of the market. And that's what's most important. So when a millennial is looking at a 30-year time horizon, investing in equities where you can participate in the growth of a business. And actually, remember when you own a stock, you are a shareholder, you own a very small slice of that company. So as the company grows and does better, you as an investor participate in that appreciation and your capital grows. As businesses go through cycles, they go up, they go down. We see that in the market. But millennials, the best advantage for them is that they have a 30-year time horizon. So 30 years out, they can ride that out. And versus bonds, where you're trading off risk for return. Bonds are slow and steady, but they offer a much lower return. So over that time frame, if you're in stocks versus bonds, historically, you're going to have twice as much in your savings account ready to spend on retirement.
And you say there's actually a negative effect of just putting your money into the bank, especially if you are a millennial. It's working against you.
It's working against them right now, and that's because it's a function of the environment they grew up in. So we've gone through a period of very, very low inflation, and we're just starting to see inflation perhaps creep back into the economy. And it's one of the things that the Fed is looking for to determine whether they want to raise interest rates or not. And millennials aren't used to that. They're used to a deflationary environment. If anything, when they go out and think of what they're buying, big consumer items like TVs, computers, those prices keep coming down over time. So they're not used to seeing inflation, which, if you have money just sitting in a pile, actually devalues that sum of money over time. That money is actually depreciating. As inflation rises and it goes up 3%, your money's just sitting there. Your money's not growing 3% if it's under your pillow.
And you say there are ways, of course, to get tax advantages by putting your money away in proper vehicles, correct?
Yes, and one of the things that I really love about millennials as we look at this new generation coming on board is that they like to do research. The internet has been a go-to for them from the get-go, and this is terrific because there's a ton of education available online. Take a look at it, go out and explore, learn about some of these vehicles that can benefit you over time. So tax advantaged, again, with that benefit of time. As a millennial, you're probably in your lowest tax bracket of your life right now. Take advantage of it, pay your tax up front, and think about things like a Roth IRA or a Roth 401k that will help you over time. Again, great savings vehicle, long-term horizon, and a program where you get a government assist out there. That's always something you should look into.
I think you just made some people some money, so thank you for coming on the show. Come back.
Thank you. Thank you.